All right, gives me great pleasure. Welcome back, a very dear friend, David Malpass, who is president of the World Bank, and he's happy because he retires in 2 weeks, June 1st. All right, freedom. Look at that smile. Holy cow. Couldn't be better. David, love, listen, congratulations on being World Bank president, doing a heck of a good job. Can I just ask you some topics? It's the front page of the Wall Street Journal today. China waging economic war on the West, I'll say. And then the question is, look, they play hardball. What are we doing about it? What should we do about it?
Yeah, change up is good. So I'm happy to be on your happy show this half hour. We need to be strong ourselves, and that means China's soft power is growing. With each of the events going on in the world, they gain some, whether that's the way the debt issues are playing out, the way their economy is rebounding from COVID pretty strongly. And so I think the solution, the answer, is for the U.S. to up its game. We've got to really rethink what we're doing in order to compete with them.
You know, one point, you were part of this for a while, the China trade team, and we made this phase one deal, which they have broken on commodities. I think we have a chart showing how they've not bought agricultural commodities. I don't know whether we still have the chart, but if we do, we'll put it up on the full screen. But they broke the deal. They broke the deal on corn and other commodities. But they break a lot of deals on technology and stuff. And I think we should be very tough with them. We should, our export control should be tough. If we have to use trade restrictions to make a point, we should be tough. And here's another thing. Europe talks a good game here at the G7, blah, blah, blah. The reality is China is, I believe, Germany's biggest export market, France, EU. So they play footsie with China, even while they talk tough at the G7. I think they're hypocritical.
I'll take a bit of another side. You know, the U.S. has massive trade with China, so the U.S. also talks that way. But the answer is to produce more in the U.S. It's not to try to block what they're doing. I think that's more of a loser's game. And so we need to have a lot more and more efficient production in agriculture in each of the commodities, and also to really stand up on subsidies. They're subsidizing, but look at what we're doing. The U.S. is subsidizing, and that distorts markets as well. So I think there's lots of blame to go around, and it'd be better for people to focus on how they make their own economies stronger.
I would protect our family jewels in advanced technology. I would.
This is really hard to do because
you're a free trader, but on China, I don't know.
Hard to do because which segment of technology are you going to protect without losing innovation? It's really important that we not become zombie companies with protection from foreign competition. And so you've got to be really thoughtful about which things are national security and how do you protect them.
Well, I did oppose the CHIPS bill. Industrial policy is a lousy way to run an economy. I grant you that, no question. Let's move on. Has the Fed conquered inflation? Has the Fed rate hikes peaked? You can say this now because you're retiring from the World Bank.
I laughed at that because inflation is persistent. Look at the core inflation numbers. But the idea that the Fed can conquer inflation, I don't think is right. The economy has to conquer it by producing a lot of stuff, doing it in a competitive price fashion, and that pulls down prices. So for us to think that the Fed is supposed to stop it and do it by raising interest rates, when you raise the interest rates, you get less production, and it's not clear at all that it's slowing down the inflation. The dollar isn't strengthening. I mean, it'd be one thing if you had the dollar going through the roof, but that's not happening. And so you really need to think about, or I would like to see the Fed saying they're a critical part of the supply chain within the U.S., and they're going to stop distorting capital flows.
We need supply side. We need a return to supply side classical economics, okay? Right?
And the central bank
produce more goods and services, keep the dollar steady. You got to reference it, right, against commodities or something. I mean, isn't that the problem? We're running a terrible macroeconomic policy now.
We spend like crazy. The debt to GDP ratio is going through the roof. We don't have a debt limit that actually works. It threatens default, which is a crazy way to try to limit something. And on the Federal Reserve side, they're buying bonds, huge, $9 trillion of bonds. Why do you think the economy doesn't grow very fast? And it's not just the U.S. The advanced economies in general are concentrating capital into a narrow group. Their government governments and they're big corporations. So you're not getting the production, and China looks at that and says, hey, this is our chance to clean up.
We need to re-incentivize the economy. I got to get Nancy Tendler in. We'll have plenty of time now that you're going to be retiring from the World Bank, and you talk about your ventures next time you come back on the set.
Thanks, Larry.
David Malpass running the Daily Caller. I think that's very cool. She's happy.
She's happy.
Happiness is very important.
Okay, Nancy's going to help.
Nancy's going to help. David Malpass, you're terrific. Thank you.